Good morning. It's June the 13th, 2016, and time to kick off another trading week. We come into today's market with nothing but doom and gloom in the news services, as you'd expect. Major players around the globe are talking up their short positions in equities and crude oil and their long positions in gold. We had a poll over the weekend that showed 19% plus to the leave Brexit side. Now, nobody thinks Britain is going to leave the EU when it gets down to it. The status quo is almost always preferred. It's hard to overturn without major right-in-your-face reasons, and there's discomfort. They can see the long-term ramifications, not good, staying with the EU, but they have every bureaucracy, every government agents in Britain will be working for it to stay with the EU, those that are in power right now. And my guess is Britain will probably stay with the EU, but that would shake things up if that were the case. How are the large players reacting to it? They're selling the pound, they're buying gold, they're selling equities. So Japan's credit rating was downrated by Fitch, I believe, or Moody's this weekend. China's numbers came in below forecast, again contracting from what they were last year, and it's hard to believe any numbers out of China. But when you look at the import numbers, the imports of raw materials and other countries' goods are declining, and that usually means that exports are declining too. So people see China's economy slowing. We have the FOMC on Wednesday. And what's interesting about this one, it'll be a full FOMC. They'll be giving their data points out. There'll be a press conference at 2:30. Sometimes major players or large institutions will whack the stock market before an FOMC meeting to remind the Fed that they can't raise interest rates. And we may see that. So we may have a couple of days of selling before Wednesday's announcement in the stock market. And that would be the biggest mover. There's no news to speak of today. We have retail sales tomorrow, which is a market mover potentially. And then on Wednesday we have industrial production, which is a market mover. And Wednesday we have the FOMC. So right now I'm guessing up bias for treasuries, but the high may be in right now. So if we fail to take out 24, 28, we can get short. Then 31 to 03. On the buy side, I think we're pointed a little bit lower, but I think stock market, the rest of it, I'd like to buy 17s to 13s. Might take a 20 to get in. Depends on what the E-mini does. So I'll put a question mark at 20. And then 5 to 9 will be buy 2. I'll get that written down. Looking at the 30-year. We've rejected prices above, basically at 28, and here we find ourselves on the low end. So our first little band, we're in it right now, is 8 to 12. We had this last rotate down at 3, so we'll put support number 1 at 8, then 29 to 1 by 1, and 21.25 by 2. On the resistance side, 20 to 24, with 27 to 31, sell 1, 7 to 11, sell 2. A little more aggressive on the buy side because I think that stock market can sell initially. One of the keys to the stock market is going to be how much buying by the 50 lot player or more early. And if we see every downtick being bought, then we know the Fed's out there and they're active early. And again, they can let it sell, but they just don't want the bottom of panic sell off. And they will let it sell for 2 days, sometimes 3, rarely over that. Now, the trading situation is if they run the E-mini down and the Fed does nothing. I'm going to separate out London because that's potential support. The Fed does nothing, then they'll buy equities back. They ran it down in anticipation of an interest rate increase and then covered. Okay, resistance is at 90, so 89, 91, 95 to 1300. We've been talking for 2 weeks that there's no reason for gold not to go to 1300 bucks if we 75 became support. 80 at 82 on the buy side, 75, 77. So we're close enough to 1300. There's no reason not to think that we'll get there. Well, we'll just open it up for our sell too. Right now at 99.50, somebody will take profits against 1300. 99.50 would be a structural sell. Buy one, 80 to 82. Buy two, 75, 77. And just looking at it, we're going to put that 85 might be where we end up getting long gold. I'd like to buy it on the cheap, but you know how that goes. Sometimes you can, sometimes you can't. And when you can buy it on the cheap, you wonder if you should be buying it, right? If you're not trading treasuries. Okay, the pound's down, the euro is up, the yen's up quite a bit. You know, Japan has boxed themselves into just what in the hell can they do situation. It's just maybe they're committing national suicide, seppuku. They're all going to fall on the knife at the same time, financially speaking, of course. Euro is pointed up, but may have found resistance. So, and the sad thing is that every country, every Western nation out there, G20 is following the same path, and as long as G20 follows the same path, everybody can do it. But if any one country pulls out and stops the musical chairs game of who can devalue their currency the most, who can print the most money, etc., then the game is over. Okay, we have 11300, and we're really right there, 1290. That is support. Don't particularly like that trade. Then 75, I can get long at 75. But we've had such a move in the overnight session that the top may be in. Crude oil is getting bashed for the right reasons. The fundamentals stink in crude oil. Remember we talked about the big play was where stops above 50, and they got it plus some. And you can just see how the market continues to sell and peel off, just B after B after B. Globex through the London session is a B. So we have a pretty clean break in the market right here in the 48.80 area. So 48.75, 49, sell one. 49 and a quarter, 49.50, sell two. On the buy side, 48 even, 48 and a quarter, buy one. Then 47 and a quarter, 47.50, buy two. The important number I think for crude oil is 47 bucks, and I think we're headed for that. If it can't break that, then a trading range of say 45 bucks to 50, I think will be maybe 45 on the downside, maybe 52 on the upside. It's my feeling that the low is probably in, but everybody have to probably come back down and retest that 35 to 38 area before everybody is satisfied. And the reason for that is that when you get to the cost of production, nobody's going to sell it. I mean, why bother? There's just, the risk to the downside after that first fall is too great for people to come in and substantially add to their shorts. Okay, the E-mini is interesting. Today, looking for the Fed, the 75 area has been pretty good support. We get the low volume number at 69, so 70 to 75 is probably reasonable support, as is 85 to 90. If the Fed is going to intervene, the market does start to sell. I think we'll see it early with a 50-lot trader. Sell 1, 84 to 86. Sell 2, 89 to 91. On the buy side, we're looking at Bs. I think we're pointed lower, but 74, 76 is support. So that's going to be buy 1. Then we're going to make it 65 to 70 for buy 2. Open it up to the downside. Pretty good support at 60. Pretty good support at 75. Looks like resistance is 85 to 90. And that's it. It's going to take a bit to get everything up and posted. I'm going to get busy on it. I will be back with you as soon as possible.